I want to talk about the Iraq Fund and investing in Bangladesh.
Yeah. Great time. You can buy stuff really cheap, I'm sure.
Yeah, man. If Brazil's breaking down, how about Oman and the Mauritius, right? The Mauritius has a stock market too. I think it's like 5 stocks. Who
Oh
knows?
yeah, Mauritius. That's a good one.
Yeah,
Very good market.
yeah. It's. I mean, technically, I believe the last. Here's Thomas is going to join us in a second. There's 160 stock markets around the world. Hi, Thomas. How are you?
Hello,
I'm
Thomas.
doing fine. Excellent. Hi.
Well, Thomas,
Great.
welcome. I know you're in Switzerland, correct?
Yes, I'm in Switzerland right now. Yes.
Well, what we thanks for coming on. What we normally do is I'll give a bio for those who don't know you, and then we could just start having a chat about some of the wild markets that you're involved in. So,
Okay, great. Yeah.
Thomas Sugar, thank you for coming. You are the founder and lead portfolio manager for Asia Frontier Capital, and Asia Frontier Capital has basically an Asia Frontier fund along with an Iraq fund, a Uzbekistan fund, and a Vietnam fund, which is amazing. Prior to founding Asia Frontier in 2013, you were partner with Leopard Capital. I believe that's how we met through Bruce Clayton, by the way. No, Doug Clayton, who we'll talk about later, which was a pioneer in investing in places like Cambodia, Dhaka, and Haiti, which we'll talk about as well. Prior to Leopard, you were the head PM and of LGT Management, the private clients, for about 10 years. And then you spent 14 years at Julius Baer, which is obviously one of the big investors in emerging markets and also private banking. And so I guess what I want to just throw this off is, I mean, we've known that, and both Jean and I, as you know, have been involved in EM for a long time. And after a long underperformance, EM awoken, right, last year. And both, not just regular EM, but also Frontier. And given the places you invest in are, let's say, you have a much higher risk tolerance than most that places you go in. What's your big picture view about when you look at these type of places like Iraq, for example, or Nepal or Laos? What are you looking for to determine whether this is investable or not in terms of the big global context?
Oof, that's a very good question. I mean, we could talk already hours about that. So, we can start with investable. I just brought down some companies to prepare myself what we are doing, and I just realized that in one company we are investing in Mongolia. They're cheap, very interesting sector. They are doing IT, uh, development of websites and programs, but also hosting of websites, and the market cap is 750,000 US dollars. So, and you know that's really amazing. For example, the entire stock market cap of Mongolia. I think it's one of the 10 biggest country in the world. Okay, it has only 4 million people of population, but still, it's one of my shareholders once said, Mark Faber, Dr. Doom, he once said, Mongolia is basically the Saudi Arabia of Asia. Okay, Saudi Arabia is also in Asia, but he meant it different because they have so many minerals. So the entire market cap of Mongolian stock exchange is a little bit more than, let's say, 2 billion US dollars. And 2 billion US dollars is turnover in one of the Magnificent Seven stocks within the first 10 minutes on trading on the Nasdaq or New York Stock Exchange. So, I mean, this is the context. So, what is investable, what not? So, I mean, that's what you see is regarding the market. So, and I mean, there we have even some markets we sometimes invest there, even smaller. I don't know, let's say 300 million US dollars entire market cap of the stock market, and so that's and that's on the low side. On the biggest picture, so we have Vietnam. There roughly 3,000 stocks now listed. They started with 10 stocks in 2001. Now 25 years later, they have about 3,000 stocks listed. I not say traded, but listed on the stock on the 2-3 stock exchanges they have, and the market cap is somewhere around 300 billion US dollars. So I mean, and that's what we are looking for. when we're going to in a market is the growth potential. So we don't invest just for fun. We want to see growth, and that's the fascinating thing on frontier markets. Of course, the GDP per capita is lower and the GDP is lower, but the growth is higher, and it's easier to achieve long-term growth for those countries unless something dramatic happens, like it sometimes does. That's why they have more risk. And that's what we are looking for. And I think it's somehow a no-brainer. So you invest in a country which is opening, let's say like Uzbekistan, we just did, and they have growth, and it's the markets, the stocks are extremely cheap. I can give you some examples later about some of the investments we are doing. And I mean, it's mind-boggling sometimes when you see these PE ratios and dividend yields and so on compared with what investors, sophisticated investors in the West pay in companies in Europe or in North America. So that's basically what we're looking for. So growth, sustainable growth, and at a discounted price. So if something goes wrong, then it's not overvalued. So even if it goes wrong, yeah, it can go down 50%. But another stock, if it's overvalued, maybe goes down 80-90%. So, but that's in a nutshell. So yeah, let's discuss. Ask me more questions so we can go further, because yeah, there's so much to say about that.
Thinking in terms of stock by stock, do you have like a checklist or a list of criteria that need to be met before you can invest in the company?
Not really. I mean, of course, we would like to invest in the blue chip companies of each stock market at discounted price. So what we're looking is at peers in other countries. So my co-fund manager is from India, so we look obviously close to Indian valuations. But I mean, yeah, that's a good example of a market which has go from non-invested by foreigners maybe 25 years ago, and now it's everybody's darling, and these valuations have just gone crazy. So when we compare our stocks we want to invest, let's say even their neighbors, Pakistan or Bangladesh, I mean, they are trading at a fraction. So, for example, we have one in Indus Motors in Pakistan. They're the assembler of Toyota cars. So the PE is 5.4 times, dividend yield 11%, and the darling in India is Maruti Suzuki, and I think it trades. It used to be trading at 40 times PE. I don't know where it is currently. Maybe it's 30 or 35 or 25. But so I mean that's what we are talking about. So I mean these are the comparisons. We invest. Or we're looking for companies which are really undervalued in our view, and then so we look at peers, and obviously what we focus on is undervalued stocks, which also have growth potential. So it's not. I mean, it's where we have one or two examples where we invested in companies where just the asset price is too low, and we don't really. If there's growth coming, that's nice to have. But we just look at value unlocking. There are one or two examples, but otherwise we look at growth and at discounted valuation. And yeah, I mean, what we're doing, we have our short list comparing. I mean, we're doing that now since 13, 14 years. So our portfolio is quite stable. We don't have a lot of turnover in the portfolio. And yeah, sometimes some stocks get overvalued, and we sell it, buy something new, which is cheaper, or I mean, maybe sometimes the sector is not anymore that what we want to be invested in, and we move out, or the country has a problem. We had that in the past. So there are a lot of selling reasons. But in general, what we certainly look at, I forgot to say that, I mean, one main focus is on consumer-related stocks. I mean, that's a lot of, it's not my my take or my invention. So I mean that's most of the emerging fund managers do that. So because consumer makes sense in the fast-growing economies that consumer stocks, they should also participate by a multiple from the underlying growth. That's what we try to find, but having said, at reasonable price. So we don't invest at yeah. Sometimes we would like to invest in Nestle in, let's say, Pakistan or Sri Lanka, but it's too expensive, or a tobacco stock, and we have to wait until it's a crisis, and then we invest. So we are patient investor.
Thomas, when you look at a country like Vietnam, where you got in, can you sort of talk us through like what year did you start investing in Vietnam, and what were things like there versus obviously today? Vietnam, not that it's one of the more popular frontier markets, but how were things when you first looked at Vietnam?
Okay, I mean, the fund was launched in March 2012, and that was exactly when basically the bottom was in Vietnam. And when I went there, it was very difficult to get a meeting. And I remember once, I mean, it was really insane. I went to see a company. We have been invested. They were a producer of containers, I mean, containers for shipping. I went there outside of Ho Chi Minh City, so we drove there 1 hour and had an analyst with me because it was a she, because she needs to do the translation. Because at that time, whenever you met a CEO or a CFO of a company, and having said that, that's what I like. That's what I especially into investing in frontier markets. That when you meet the company, you meet a C person, so a CEO or CFO, sometimes a CEO, whatever. So I met the CEO in this near the port where they were producing these containers. And when we went in this small office, it was in a container in the middle of nowhere. So he started talking Vietnamese to the analyst, and then he got really aggravated, very angry, and talked to her. And then said, "Oh, what's going on here?" And then she translated and said, "Yeah, the CEO said that the company is listed on the Ho Chi Minh Stock Exchange. They are publishing on a quarterly basis the results, so I can see everything there. He doesn't understand why I'm coming, and that's really and stealing his time." So yeah, that's how it was. So and yeah, I mean, when we met the companies, I remember one company, they were bluntly lying to me. They didn't talk. This guy, he was not the CEO, he was the chief accountant or CFO. I mean, bluntly lying, I mean, about the forecast, how the business is doing, and yeah, at the end, 3 months later, they came out with the results. It was completely opposite. Instead of the business, the turnover going up, it went down, and so on and so on. So it was really Wild West. And yeah, also investing in the stock market itself, the liquidity was, of course, very poor. There was no interest. The mood was very bad, and yeah, we were one of the first foreign investors. And at that time, as I said, as by my first example, foreigners were not really welcomed because Vietnam went through from 2008 to 2011 through a very tough time, and basically, and that's not only in Vietnam, but that's in many of these frontier markets or emerging markets. So when the market goes up, it's a local market and good economy. When the stock market goes down, it's the foreigners selling. So we are the victims then, or victimized.
I'd like to understand a bit your process, like to identify stocks. Do you have any kind of quantitative screen to identify opportunities, or how do you go about it?
We have obviously quantitative screen where we, as I said, the most important thing. So we go through these lists. I mean, there are a lot of shares, and then a lot of them drop out. Then we have a short list, and then the most important thing, then we compare it. Does the valuation make sense with others in the region? As I said, Philippines, Indonesia, and India is some kind of benchmark where what we're looking at. They're very similar to ours, or Thailand. And thereafter, yeah, one of the first thing is we try to either visit the company, or we have visited the company. We know them. I mean, we're doing it since 14, 15 years. So, and there are not too many IPOs. So it's more or less the same names appearing. Suddenly a new name appears, then we have a look, or sometimes we get a research or a call or whatever, then we take a closer look. And of course, it has to match our portfolio, and also very important. It's not only a sector basis. What we do first is we look at countries. So we do a top-down approach. We select the countries because it doesn't make sense. And we have seen that we experienced that a little bit, unfortunately, the hard way in Pakistan and Sri Lanka in late 18, 19. Even we were worried about the economy, and we also thought the currency could also devalue. We didn't sell everything because we invested in some stocks which we thought which should benefit from a weaker currency. So let's say for example, oil producer in Pakistan, but still we lost money with these investments because the currency went down so much. So that's a lesson. So we will stick even more disciplined to this approach. So first, also country exposure that we want to like the country. We think we are convinced that it's on the right track because it doesn't make sense like this oil producer in Pakistan. Yes, it was in the right sector. The company made profit. The stock price was basically unchanged, went up slightly, but we lost on the currency. So that's also very important.
I wonder how do you feel about the changes that the global order is going through? You know, the deglobalization trend. The old story in most emerging markets and frontier markets in particular was, you know, you followed the East Asian path, the way Vietnam was successful and so forth, and then Bangladesh, Cambodia, everybody in Asia, everybody's understood, you know, that's how you go about it. Can you still do it today, or is the world changed so that these opportunities no longer may exist? I saw recently, for example, Bangladesh got hit by U.S. tariffs and so forth. Does the model still exist, or things become much more complicated?
No, I think the basic model still exists, and I mean we can go back after the Second World War. It was Japan who was the first country benefiting from this. Then afterwards, Hong Kong, Taiwan, South Korea, and Taiwan. And you see, these countries still, and then later on China. And China basically started in the 80s. And it's a trend which is not 2 or 3 years. It's a multiple decade trend. And so that's why I'm also very positive on Vietnam. So we have seen, let's say, the changes from Japan, which was basically nothing, ruins, and what they are today, or Taiwan, South Korea as well, was poorer than the Philippines. The GDP in South Korea was lower than in the Philippines, and now it's surprisingly still an emerging market, but that is another topic we can discuss about it. But I mean, it's so developed, and then we have seen China, and I think the next one in this chain is Vietnam. So they start produce like in Hong Kong or in China, they start producing toys and simple plastic flowers and this kind of stuff. Then they are, I think, going up the value chain, and now China is the leading producer of EV cars and a lot of other things, high technology. And let's say we don't want to talk about Taiwan and South Korea. And I'm convinced that Vietnam can follow the same step. It's already doing it, the first steps. So it takes some time. So, for example, yeah, in Vietnam, outside of Haiphong or Hanoi, Samsung built a huge factory, and the same happened in Shanghai with Volkswagen, the German car producer. They went there, started a factory, and then a lot of assemblers and car parts manufacturer started to moved there to Shanghai and started an entire ecosystem. Same happened in Shenzhen, and now with also high tech. We have seen that in outside of Taipei or in South Korea, in Seoul, and so the same pattern is now happening in Vietnam, in Haiphong with Samsung. So a lot of global, now even global producers, and Microsoft is going there, Apple is going there. So it's only starting. I mean, it has started maybe 15 years ago, but we are not maybe in halfway in this process. And you mentioned Bangladesh. I mean, Bangladesh is just started with putting clothing together or weaving, and now they're doing more and more. So the ecosystem is there for producing more, maybe in the future, more high-end textile products, and then they will go branch out in other sectors like maybe pharmaceuticals, and I don't know what else. So this process is, for example, in Bangladesh, it just has started, and the same is in Cambodia, and it will happen in Laos, Pakistan. I was 2 years ago in Pakistan. I think the government really also tries there because they're not exporting anything compared with Bangladesh, or hardly anything. And so there, the government has also seen what's happening in the world, and they also try to replicate what Bangladesh and Vietnam did. So the same success story, and the same again happening in Uzbekistan. So when the new president came in power, the first thing he said, okay, we stop there's a export ban for cotton, raw cotton, only manufactured or improved or whatever cotton can be exported. So the first start of value added or in the cotton process or textile process is now done locally. And yeah, I think that's a no-brainer. You easily create a lot of jobs and employment, and that is then follow on is consumption and so on. And so the story starts moving.
How do you see the impact of China on these markets? On the one side, there's the Belt and Road, for example, that can be good. On the bad side, a lot of countries are suffering a lot from dumping of Chinese goods. Which countries do you think are better positioned to benefit from China?
Yeah, obviously the adjacent neighbors should benefit. And yeah, I mean, we can talk negative things about China, but in one context, you need to very clearly to see it's not. I'm not talking here more about Asia. Asia is maybe a little bit more story, but let's say Africa. We are not investing in Africa, but Africa. I mean, nobody is investing there. The Europeans are not investing. I mean, there are a lot of French, previous French yeah, run countries, or Belgium or Portuguese. Nobody's investing there. So of course, I mean, they're so desperate for, and they really need foreign investment. So China is filling the gap because the Europeans and North Americans are not doing it, unfortunately, and also not, let's say, the Middle East, not yet. So I think, yeah, it's a good thing. It's a blessing for some of the countries, but you mentioned it. There are some issues sometimes, so that you see dumping. We have an example in Uzbekistan where the government also opened the cement sector. Then Chinese cement companies came in, and now the price of cement has completely collapsed. And yeah, some of the local companies which still rely on coal or gas firing, yeah, they're not cannot compete anymore with price dumping by the Chinese, where with their modern machinery and technology. So yeah, you're right, and we have also seen other countries going into that threat. That is certainly, I may probably also a lesson now. The Chinese are learning that yeah, you cannot settle the country or your counterpart with debt and ask for immediate repayment. So I think everybody's learning, and I hope we're on the right track.
Yeah, did Uzbekistan do anything to protect the local cement producers, or they just allow the imports to come in?
Normally, they are very protective. I don't know why they were so lenient towards the Chinese when they came in. I mean, it was right at the beginning, so they said, "Oh, we have a cement shortage," so they had to import cement from other countries. So they welcomed the Chinese producers, and maybe they had a. I'm not. I don't really know all the background. What do we know? What's discussed behind closed doors? But probably the Chinese negotiated some kind of deal. Okay, we invest, and but we want to have this and this agreement. And yeah, but I don't know. It's just a guess, and yeah, it's very tough. So, but I think over the long run, it will smoothen out. It's just short-term phenomena or short mid-term phenomena. So some companies will go out of business, but of course still again there. So for example, one of the first, I mean, of course, cement companies, every emerging and frontier fund manager loves cement. It's basically, it's infrastructure. So if a country starts growing, you need a lot of infrastructure. That's the same in Uzbekistan. So the cement price exploded, and we also invested in a cement company in the middle of a desert. They have the limestone quarry, and it was great. I mean, the market is still today. I mean, the turnover of the Tashkent Stock Exchange is sometimes on a good day $100,000, so or less. And at that time, yeah, you're laughing at me, but it's somehow sad. But it's unbelievable that in 2026 you still have this, and this is not a Mickey Mouse country. I mean, soon 40 million people. So when we started investing there in 2018, our broker he sent stuff. One of his person went to the factory in the middle of nowhere in the desert, and after they have their work shifts, of course. After every shift, he went to at the entrance or the exit of the factory and asked the people because Uzbekistan is also former Soviet Union, Soviet country, so that also privatized the companies. So every employee or the village had some shares or got some vouchers, and they bought with those vouchers shares of the companies from the village because they knew them. So they went to at the entrance of the factory and asked them, "Do you want to sell your shares to us?" So that's how we got a nice block together. So that's how we started investing in Uzbekistan. So I heard the same story in the early 2000s in Russia. Exactly the same happened. So I know I was working when I was at Bank Julius Baer. I was a trader, and we had also two fund managers running a global frontier fund. They also did that. They went to, or the brokers went to Siberia or somewhere to a nickel smelting plant and bought the shares.
Amazing.
Yeah.
Thomas, just I want to switch gears a little bit. So you guys have a fund in Iraq. Obviously, you've probably been all over the Middle East. What other countries have that people do, obviously outside of Saudi and Qatar and the UAE? What other countries have you looked at in the Middle East with stock markets, and are you reassessing now because of the conflict that's going on?
Okay. So I have to say one thing. So we are only investing in countries which are either in the frontier index. So that's in the Middle East, it's Jordan, Oman, and Bahrain. They are still in the frontier index. So these three markets, we look at it. We have not invested in Bahrain. We didn't find an interesting stock, and also we had took us some time to get the custody done. That's also an issue sometimes, the access to these markets. So these are the countries in the MSCI Frontier Index. So right now we are not invested in Jordan. Unfortunately, we should have. We had two stocks. We sold it, and they just went ballistic. They were in the right sector, and we just started investing in Oman last year. I mean, as you know, I'm also pretty old, so I've been in Oman on a holiday 2-3 times, so I knew the country. So my analyst went there for before COVID, and I went here last year on a conference. And Oman is just on the verge to be upgraded from frontier to emerging market index. So it might happen in 1 or 2 years. So last October I went there. So there was one stock missing with a market to reach a market cap of 1 billion. Now it's there. So we invested, and now with this whatever happening down in the Middle East, obviously Oman is a very big beneficiary because it's shielded from Iran. Of course, if they want, they also can send drones there, but it's somehow shielded, so they benefit a lot right now. And I think in the future as well, with the Strait of Hormuz, maybe they need to think, maybe do this oil storage or oil the oil ports and this shipping infrastructure, maybe build it somewhere else. And Oman, I think, is very greatly situated there. Other markets in the Middle East, which are not in the frontier index, so that's we also investing in those markets. That's what we actually like a lot. So obviously is Iraq, and another market which is just, I mean, there's also in what is it? In Palestine is also a stock market. Uh, then in Lebanon is a stock market, which completely collapsed. The currency collapsed, but now it seems to recover. But I don't know now with this situation, of course, it's very different again. And another market which just appeared on our screen. I mean, I followed it with one eye, but we couldn't touch it. Is Syria. So because Syria was sanctioned, they have a stock exchange in Damascus. Obviously, they had civil war for, I don't know what it was, for 15, 20 years. But now, after the new government president came in, so Trump has lifted the sanctions. So it's something we are looking at. We are right now in the processing of getting approved by the Damascus Stock Exchange that we can trade there. Now the next step is getting a brokerage account open. I have an email there. I should do that. It's now a little bit on my back burner. I have other more important things to do. And then the next thing is getting the money into the country. That I'm not sure if that works with our existing banking relationships. And then I need also to sound out of obviously the investors, if it's okay, because if there are still European sanctions or whatever, then yeah, we have European investors. It would not be possible. Or and then of course our bank, if I ask them to transfer money to the broker in Syria, I don't know. I have the risk that they close out the bank account for the fund. So, and obviously I don't want to do that. But that is something I've looked at. We had a nice talk with the leading broker there. Nice guy, perfect English, better than mine, and really top notch. And yeah, I was very impressed. That's so it's not, that's fascinating. Everywhere you go, you meet interesting people and smart people, and that's a great thing, and it's fun.
Thomas, what's the macro story for Iraq that makes you optimistic there?
So the macro story is basically the country had 3 or 4 wars in the last 30, 40 years. Civil war, ISIS, then 2 invasions by the US, then a war with Iran. And so normally these war-torn countries, if they're coming out of in a peaceful time, the economy should take off, and the stock market and so on. So that's theory number one, obviously. And obviously, I'm also more optimistic on the long term for the oil price. So I think this country should also make sense to invest in a country which the exports right now are 95% in oil and benefits. And they have hardly any debt, no budget deficit. Everything is financed by the sales of oil because they have a great. I mean, they're basically replicating Norway. So all the oil belongs to the government. They're benefiting. The oil majors, they only get some kind of take up for the cost, and the rest, the fluctuation, the speculative gain goes into the coffers of the country. So I love this principle, and we have seen Norway was very successful, and I think, and Iraq, it's a big country, also around 40 million people, very young. I was there last year. It's unbelievable. Hardly. I really felt. I normally feel old, but there I really felt very old. I mean, hardly anybody is above 30. Everybody's 20, 22 years young, and so it's really impressive. You see the growth. Baghdad, I had no idea what I will expect. I mean, of course, if you go into Google and check travel to Iraq, the first 10 pages is only travel warning from every country on the planet. But yeah, I felt safe, and you see, and that there's growth, there's future growth. I mean, construction is going on, and nice buildings like in Dubai. No, no, I'm of course not the Burj Al Arab, but I mean, even office towers, complexes with shopping center, office buildings, and nice apartment buildings, nicer than in Hong Kong, really. And people, yeah, you see that the country is transforming. That is the story. So, young country, natural resource rich, uh, coming out of war, and then, yeah, and it's not like let's say East Germany or Cuba or North Korea where the infrastructure is gone. There's infrastructure, of course, it was depleted, but now I mean the highway. I mean, I tell you, I mean we drove from Baghdad to Basra, and the highway was really great. I mean, better than probably highway in the US, or as I always jokingly say, better than a German autobahn.
Has there been a lot of new investment in Iraq from foreign investors, or it's all local money?
Uh, it's a I mean, the stock market is only local. There are very few foreigners. So we are one of them. There's another fund in New York, and then maybe a few investors, maybe some individuals from the Middle East, from yeah, Dubai or Qatar or Kuwait, who are investing there. But in the real economy, there's a lot of local money going. I mean, this lot of this construction uh, uh, investments or projects were locally funded. But now is also, of course, interest coming from other countries, middle, of course, Gulf countries, but also now Saudi Arabia is warming up. The tensions between Saudi Arabia and Iraq is improving a lot, dramatically, and that is will be a major game changer. If really, I mean, Saudi Arabia already has started with the first projects. I mean, that they want to do. So I mean, that could be really very big. And then, yeah, for example, most of the banks. 70% of our Iraq fund is in banks. Almost all the banks are majority owned by foreigners, and mainly by Gulf or Jordanians or yeah or Lebanon. But the stock market is completely retail, and turnover is on a good day a million, 2 million US dollars.
Hmm. In general terms, how do you find the governance in these markets? In terms of IR and transparency and reporting. How easy is it to rely on the financials that companies give you?
Uh, Look, Sean, I could, we are investing in 60 markets, so every country is different, basically. So there are things like, yes, we want to invest in consumer stocks and undervalued stocks. That they have all in common. But then, if you ask us a question and the next few questions, every country is different. I just tell you an example what we have experienced right now in Mongolia. And Mongolia is pretty bad in corporate governance and this kind of stuff, in IR especially. So the companies, they don't want to see you, they don't speak English. And what happened now, the stock exchange, so it's first quarter, February, March. So the companies should announce the financial results for 2025 and announce a dividend. So in Mongolia, they have to announce the dividend, I think, until 15th of February. So sometimes a company announces a dividend, but they don't release the financials 2025. It's very strange. And so the Mongolian Stock Exchange, they have a website, was pretty okay, pretty good. Most of it in English, so you could also check the annual reports. They are there, but most of them only in Mongolian. But nowadays, I mean, with smartphones and with Google Chrome, you can translate it, so it's getting much easier. But the, the Mongolian Stock Exchange, I think on 9th or 10th of February, they decided to, over the weekend, to introduce a new website, brand new website. And since then, no more earnings releases are put on the website. No dividends announcement. No announcement. Nothing. Now is 19th of March. Nothing happens. I don't know. So these are no good example of a frontier market. I could I normally give 1 hour, or 1.5, 2 hours presentation at Hong Kong University, and there the professor, she's a good friend of mine, and she says, I want to hear war stories. So I tell her all the war stories. It's mainly Mongolia and Uzbekistan, what we experienced, what kind of, issues. So yeah, I mean, let's say in Vietnam now, in Vietnam the companies have to issue the annual reports or the financials on a quarterly basis within a certain time limit, and now they're going to implement also, because they want to be upgraded in the MSCI Emerging Market Index. They're also going to introduce in the next 1 or 2 years that the financial statements have to be in English. Also in overseas Bangladesh, everything is in English. Pakistan and Sri Lanka, everything is in English. So and the stock exchanges there are very disciplined. If a company doesn't submit the financial statements in time, they are delayed. The stock is in. It depends on the stock market is suspended. So Vietnam, for example, if they don't announce, they are suspended. Sometimes, Vietnam is a little bit strange. I think if the company doesn't make a profit within in 3 years, they get downgraded to over-the-counter market and so on. So I think it's a little bit too much. But yeah, I mean, there are things. But having said that, depends on the country. For example, in Mongolia, a good example as well. There was a new company listed in the about 1.5, 2 years ago. It fell below the IPO price, so I got more interested. It's in the finance sector. It's a microfinance company. Fantastic numbers. So I wrote them an email. I got it from the website. I want to have more data, financials. Maybe we can have a call. Never got an email back. So that, So that's sometimes the hardship. And the brokers, completely useless in Mongolia. It's mind-boggling. I don't know. I'm not surprised that the turnover is so low and that stock market cap is. There's no sense of customer service or whatever. They have no idea what we want.
Thomas, give us a feel for when, I don't know how often you look to fundraise, but when you're looking to raise more money, what's the profile of an investor, let's say an institutional investor, or is it retail? I don't know, that would invest in your frontier fund, or specifically in an Iraq fund or Uzbekistan or whatever. Like how do you when you to look at fundraising, when you're looking at allocations, where do you go to find these investors?
Okay, so what we do is we do a quarterly webinar where all our 4 fund managers talk for 1 hour, 15 minutes about the markets, and about each fund. So that's what our promotion is. And of course, I mean, we are open-end funds. We are not a private equity fund, so we are constantly fundraising. We have a website. We have a newsletter. We send a newsletter out to more than 20,000 people. So that's where they hear of us. And the best source is things like that, webinars or newsletters. We were just mentioned. Our Uzbekistan fund was mentioned, for example, recently in a newsletter by a German guy living in Sark. Yes, it's an island between France and England. So he has a newsletter on thevaluechairs.com, and he mentioned, I talked about, first a couple of years, that's how I learned about him. He just suddenly wrote about Iraq, and then he mentioned our fund, so we got some investments there. And now he wrote 2 weeks ago about Uzbekistan investing. It's the second time. I mean, what kind of great story this. So to go back to your question, what kind of investors do we have? First of all, we only have 125 million US dollars under management. Our biggest fund is Vietnam, so 75 million. We have there a few institutional investors, but and the other one which could also maybe getting interest for institutional investors is our Asia Frontier Fund, which is now at 26 million US dollars. So, but I mean, it's tiny for the US. So let's say sovereign wealth fund or endowment fund. We're too small and we're too niche and so on. So most of our investors are family offices, some small outside of the box thinking institutional investors, some small funds. And what we see a lot of, they're just we organize, let's say, in the past couple of years, every year, an investor tour to Uzbekistan, and then before we did that in Vietnam. And it's a very small club, which is like a club investors. We have the same thinking, all more or less look at the same, blogs, newsletters, readers or subscribers, believing in the same very similar stories, let's say like bullish on uranium or gold or oil or those countries. So yeah, it's a lot of high net worth individuals, so not retail investors. We're not allowed to market our funds to retail investors, so there should be accredited investors in the US or professional investors in Hong Kong or in Switzerland and so on. So yeah, so affluent investors, very knowledgeable, very interesting people. So I made a lot of friends, met a lot of interesting people, former CEOs of big companies and so on. Yeah, and yeah, some family offices. So this is the crowd we are attracting at the moment. I mean, you were talking about, since basically the US has a new president, the current president, we have seen globally that more money goes out into, let's say, non-US developed markets than emerging market, now frontier markets. But having said that, on a daily basis, still foreigners are selling in Vietnam, Bangladesh, Pakistan, Sri Lanka. Even today, it's not the last couple of days, but let's say in January, February, when the markets really took off, foreigners are still net selling. So it's really surprise.
And are there any markets now that you have your eye on as, let's say, for the future? Maybe not investable today, but something, a country or something that you're saying, hey, I got to watch this because it's ready to become interesting.
Yeah, I mean, obviously, I mentioned it's Syria we are looking at, but the stock market is very small. I think 30 or 40 companies are listed there. Some are good, cement companies, banks. So I'm certainly will watch this market. It looks interesting. I mean, we are already in some of these markets. So you can ask me, Thomas, where do you have most of your personal money? So, and I tell you, so most of my personal money is in Uzbekistan, and number 2 is in Mongolia. I think Mongolia, there are no foreign investors. It's so ridiculously cheap, and it's difficult to access. It's not easy to trade there. It's, as I said, market cap, I don't know, it's maybe $2 billion US. So 10 minutes of Tesla trading in the US. But I mean, and if you look at the market cap of Tesla compared with this huge country, I mean, it's just mind-boggling. I mean, they have so many reserves. Of course, I mean, the market cap doesn't represent a country, but still, if you compare the market cap of Tesla with, let's say, the GDP of Mongolia, I mean, or Pakistan or whatever, I mean, it's just amazing.
Mongolia and Uzbekistan, are they both like the typical commodity plays? So do commodity prices have to be firm or rise for those markets to work well?
Yeah, well, it's definitely the very typical commodity place. And they're very lucky, as Mark Faber said, it could be the Saudi Arabia of Asia. I mean, you take a whole, I mean, I'm from Switzerland. We have nothing. I mean, you're obviously from Belgium as well, chocolate, nothing else. And we have also nothing, water, and that's it. And then you go to a country and you will dig a hole, and then you either have gold, silver, copper, coal everywhere, and other seldom minerals. I mean, rare earth minerals everywhere, and it's so huge. So I mean, the problem is water. Of course, for mining you need a lot of water, and electricity. But so I mean, yes, it's extremely geared to commodity prices. Uzbekistan is a different story. Uzbekistan used to be the North Korea or second North Korea of Asia, was closed. They were very unlucky. They had not a nice president for a long time, so Karimov. But when he passed away, the new president who got in power, and that was a little bit strange because he was the prime minister under Karimov, and he became the president, elected president for the first couple of months. He continued like Karimov did. And then Mr. Yoyev came out and said, after about 4, 5, 6 months, and said, "This is my vision. I want Uzbekistan to open up again, attract foreign investments, make the currency fungible, or you can repatriate the money again. People can visit our country without having a visa. I will make it possible." And more or less everything he said, he was even earlier than the time limit or time frame he said. He fulfilled it, and I think it's a great story. It's of course it's a landlocked country, not even landlocked. It's a double landlocked country. It's only two countries in the world which are double landlocked. So Uzbekistan is one of them. So it's certainly not helpful, but they're in a very interesting spot. I mean, it used to be the Silk Road. So I mean, Bukhara, Samarkand, Khiva, they were the heart of the Silk Road. So it's a very interesting spot. And the new president, so Mirziyoyev, he also plays it very well. So of course, now he has a very difficult time with Russia. But so I mean, he deals with Russia, with China. He attracts Middle East because Uzbekistan is also a Muslim country or Islamic country. So there's a lot of interest from other Islamic countries. Persia, Iran is just a neighbor, so there also used to be there's a huge heritage. They also celebrate Persian New Year. I think it's on Monday, and so there's a lot of. And also Turkey is a big investor there. So and the US. So what he did, the first overseas trip he went to Biden to meet Biden in the US, and so and he play and also Europe. He plays all the cards. So and it's smaller than Kazakhstan, and Kazakhstan is also one of the 10 largest countries in the world. I don't know if it's number 6 or 7, but Uzbekistan is smaller, but has bigger population. So Kazakhstan has around 24 million, and Uzbekistan soon 40 million, and it's growing very fast. And Uzbekistan, you should not forget that Tashkent used to be the 4th biggest city in the Soviet Union. So the Soviets put a lot of infrastructure into Tashkent. They also have a nice metro, like in Leningrad and St. Petersburg or Moscow. These nice metro stations. But also, let's say, airplane manufacturing was there because you need a lot of steel and these kind of components. And copper and iron ore is in what's now Uzbekistan, and obviously, and that's what makes us also made us very positive. Is so we found a stock market at that time, 200 stocks listed on the main stock exchange. Now they've kicked out a lot of inactive companies with bad corporate governance into the OTC market. So there are about I think 83 stocks or companies listed on the main stock exchange, and about 500-600 in the OTC market. And so some of them pay a dividend of 20-25%. Trading at, like the cement company now is trading at 0.15 book value. So and had the cement companies used to be the largest. I think it's probably still the largest in Uzbekistan. Had the last dividend payment was in 2022 was 660 some, and now the stock price is 1,000. So you see what kind of potential the company could have. So the stock price is 1,000, and the last 12 months was 40. So I think to invest in a company at 0.15 times book value, I mean, that should be okay with this track record. So what I want to say? So we found a stock market with good companies. Let's say our biggest holding is as a bank trading at 4.3 times PE and growing at more than 20%. So we invested. The second biggest position is the Uzbek commodity exchange. So they don't trade commodities there, but in order to avoid corruption and these kind of things, all the procurement has to be done through this commodity exchange. So steel, cement, concrete, and these things, and everything goes there, and the exchange makes guaranteed money. So this company trades at 8.8 times PE. Dividend yield is around 10%. They just paid the dividend last week. So these are the things. So really good companies, well run, very cheap, and the country, the biggest or maybe the second biggest operating gold mine in the world is in Uzbekistan, and they have right now all the time foreign reserves of around 50 billion US dollars, and until last year the foreign debt was lower than the foreign reserves. Now for the first time I think the foreign debt is higher than the foreign reserves because they import so much of good. I mean, they need so much of infrastructure and upgrading of existing factories and investments and this kind of stuff. So but I mean, it's manageable. So that's why it's not, Uzbekistan is a great place. It's an interesting place, benefiting also from commodities. So they have, as I said, the second biggest operating gold mine. They have more gold. And what the Soviets did during when they were in this, when they're part, so when they're active or when these countries were part of the Soviet Union. So they focused their oil and gas drilling in Turkmenistan and Kazakhstan. So Turkmenistan has one of the biggest gas reserves, and Kazakhstan is has a lot of natural resources. So they didn't really focus a lot on oil and gas drilling in Uzbekistan. But I mean, the western part of Uzbekistan is just between Turkmenistan and Kazakhstan. They drill there for oil. They already explore oil. They produce oil there and gas. But I mean, there's probably also much more in there. It's just not has never been focused for exploration there.
It sounds fantastic. I had a question on Mongolia. China's right next door. Why isn't China all over these resources, given their need for resources?
Yeah, it's a good point. I mean, interestingly, Mongolia has only two neighbors. One is Russia in the north, and one is China in the south. But yeah, what China did is they have a province. I forgot the name. It used to be part of Mongolia, so it's in English it's Inner Mongolia. So they took this away. So that's a little bit, it's a sensitive topic if you talk about Inner Mongolia. So that's why maybe the relationship between Mongolia and China is not that great. I mean, and obviously from history, the Chinese wall was built because of the Mongolians. So yeah, so it's hate and love relationship, but of course, Mongolia they try to export their products into China because China is not. I mean, Beijing is not too far away from the southern border of China, of Mongolia. So, and there are a lot of coal mines, and also Oyu Tolgoi, one of the biggest copper project in the world. And what they are doing is they're putting infrastructure, so building roads and especially also railways to the Chinese border. And from there, it's not far away to the domestic Chinese railway lines. So there is improved trading between Mongolia and China. So Mongolia tries everything to please the Chinese, and also the Chinese because I mean the last couple of years when they have this exponential growth, they also needed a lot of copper, iron ore, and of course coal, because the coal and some of the coal mines in China are very old and unsafe, and in basically Mongolia you can just scrap the coal from the surface, so it's more secure, and and the quality is very good. They have a very different quality of coal, and they export. So the exports have gone up a lot, and also that in the last 10 years, and it has multiplied, and it has benefited a lot the country. Don't forget, in 2013 or 14, Mongolia was basically also on the brink of of collapsing. So they had also go to IMF to get a emergency loan. So, yes, the country is extremely geared to natural resources, especially gold and coal and a little bit copper, and only has two neighbors. And the only neighbor they can export right now is basically China. So yeah, they depend a lot on China. That's a risk.
Thomas, what about what's the status of? I know Ivanhoe Mines has a big copper operation. Is that up and running yet? I mean, is that a way to play Mongolia through Ivanhoe?
Yeah, so Ivanhoe, they were taken over by Rio Tinto, and then I think, and then Rio Tinto, so yeah, and Rio Tinto is in bed with the government because it's a strategic mine. So the government owns, I think, 1/3, and 2/3 is owned by Rio Tinto. So they had a very tough time. I think they started producing, and then the second expansion, the first expansion, second step was a huge, really big underground mine, and that cost a lot of money. Was cost overrun. So the government and Rio Tinto, they were a little bit under, not on friendly terms, but it's so far, they're operating and producing, and yes, it's up and running. So Ivanhoe is not anymore on the stock market, so it's now Rio Tinto, and yeah, of course, Rio Tinto has a lot of other big mines in Chile or whatever. But yeah, I think in Chile they have some problems. So yeah, Mongolia is getting back again to be interesting.
Thomas, amazing. This has been great. I mean, you are definitely involved in a lot of things that not too many people are involved in, and fascinating. And obviously, you must be on the road a lot. It must be an interesting travel schedule you must have.
Yeah, I enjoyed the conversation a lot, Thomas. It was great.
Thomas,
Yes.
I'm going to post some information on the Asia Frontier Fund on the website. I mean, on the video, so people can get in touch with you. But Thomas, it's been amazing. Thank you so much.
Yeah, thanks for hosting me. And yeah, I really like the stuff. No, I'm getting older, but it's all about this. What I want, what I'm doing now. It's my own job. I have great, motivated people who also live and breathe the same air as me. We love what we're doing, and yeah, it's also my hobby. I said I'm investing personally in those markets, finding new places. It really keeps me on, and yeah, it's makes me waking up in the morning not frustrated and happy and trying to find something new.
Thanks, Thomas.
And meeting interesting people like you, Tom and Jean.